Understanding debits and credits. Accounting is essentially the language of business, and debits and credits are its basic syntax. A debit, in the simplest terms, is an entry made on the left side of an account ledger, and a credit is an entry on the right. But rather than simply being about adding or subtracting, where these entries are recorded depends on the type of account involved and the nature of the transaction. While it might seem counterintuitive at first, a useful way to think of it is that debits can increase assets or decrease liabilities and equity. Conversely, credits can decrease assets or increase liabilities and equity. This rule adjusts based on the specific accounting category: assets, liabilities, equity, revenue, and expenses, turning what appears to be a jumble of numbers into a structured, understandable format. Understanding this core concept sets the stage for all sorts of accounting magic. Let's bring these concepts to life with an example that a popular YouTuber might use if they swapped their video content creation for spreadsheets. Imagine a scenario where a content creator launches a new line of merchandise. For every hoodie sold, the transaction would look something like this. The cash account, asset, increases, debit, and the sales revenue account, revenue, also increases, credit. But the accounting story doesn't end there. The content creator also had to purchase these hoodies before selling them, engendering another transaction: purchasing inventory. Here, the inventory account, asset, is increased, debited, and the cash account is decreased, credited, because cash is paid out to acquire the hoodies. Navigating through this maze, it is clear how each transaction impacts the business's financial state. It's not just about money coming in and going out, but about understanding where it's being allocated and how it affects other aspects of the business, from equity to liabilities. One popular mnemonic for accounting students is dealer. Debits increase expenses, assets, and losses. Credits increase equity, revenue, and gains. Narrator. To make recalling these rules easier, mnemonic devices can be extremely handy. With dealer, students and novice business practitioners can quickly determine how to record transactions without delving into cumbersome textbooks. Narrator. This mnemonic simplifies the complexities of financial transactions into something far more manageable, especially for beginners grappling with accounting concepts. Moreover, associating each transaction type with real-world implications, like blending the conceptual with the tangible, fosters a more intuitive understanding. Every debit and credit isn't just a figure entry, but a reflection of real economic activity. Products being bought, services being rendered, and investments being made. Adopting a dynamic approach to teaching accounting might actually make the subject more accessible and, dare we say, even a bit entertaining. By breaking down debits and credits with clear examples, practical applications, and helpful mnemonic devices, the essential elements of accounting become less formidable and more intuitive. While we're not suggesting a complete career shift for content creators into accounting, envisioning such a crossover highlights the ubiquitous nature of these financial principles, crucial for anyone in the business of making money, which, essentially, is every entrepreneur out there. Thanks for tuning in. If you enjoyed the video, don't forget to hit the thumbs up button. Your support means a lot to us. While you're at it, subscribe to stay updated with our latest content. Got something on your mind? Drop us a comment below. We'd love to hear from you. See you in the next video.